mortgages are actually some of the easiest mortgages to qualify for. The biggest criteria for that is going to be 62 years or older. And you do need to have, depending on your exact age, you typically want to have somewhere around a 40 to 50% equity position in your home. So if you just bought your house with a low down payment, or you put a really small down payment when you bought it a few years ago and you haven't really bought equity, maybe you only have 20% equity in your home, 25%, you're probably not going to qualify for a reverse mortgage. But the great part is that I've had seniors that come to me with low credit scores that couldn't get approved for these other forward mortgage strategies, and we can get a reverse mortgage done. We're not really looking that much at their income like a forward mortgage. We're not really looking as much at their credit because there's not a payment obligation. You see, so it's really more about the equity that they have in the home because that's what the bank is lending that money on.
You said something, Rob, a moment ago that really caught my attention. All right, and it pertains to the misconception of the reverse mortgage. When, let's say someone passes away who has a reverse mortgage, I always presumed that the bank more or less took possession of the home.
No.
Like, for example, because maybe payments weren't made on a monthly basis for whatnot. You can still have your heirs, your children, so to speak, or they can still take possession of your home?
Absolutely. That's the normal protocol, and that's why people need to realize the truth about this. The bank doesn't get involved unless your heirs drop the ball. So when you either move, you sell the house, or you pass away, those are the three triggering events that will cause a reverse mortgage to come due. Now, as an heir, you have the option of either refinancing that into a normal forward mortgage, paying it off somehow, selling the house as an heir. You can sell the house, pay the bank what's owed, and get the rest, again, depending on estate planning and other title issues. And obviously, if you're going to move to another property, if you're a senior and you're just looking to relocate, for example, then it's going to be just like a normal protocol. Like we said, either you're going to sell the house, pay it off, give it to someone, whatever the case may be. As long as the bank gets their money that's owed, they're not going to be involved. The bank only is going to foreclose and get involved if your heirs, like I said, drop the ball and they don't handle getting the bank their money. That's the big thing.
I learn something new every time we're together, and I can imagine how the new issues that people listening are. How long before retiring should seniors review their mortgage plan? This is not something that should just be done off the cuff on a whim spontaneously.
And it kind of comes into play with your last question about what criteria and how difficult it is. Will the banks approve it? It is difficult when you're retired. Once you move into retirement and you're just getting your pension, Social Security, annuity, whatever type of retirement setup you have, it can be very difficult and sometimes impossible to get a mortgage at that point. And that's why with all my clients and anyone that's even approaching retirement in the next 5 years, I always tell them, review that mortgage plan, review your entire financial plan, a minimum of 6 months, and ideally 1 year before retirement. And here's the reason why is you're working at that point. You have a job at that point. You have the income, typically, not in all cases, but most, you're going to be making more money when you're working an active job than you will when you're just getting your Social Security, pension, or retirement income. So it's important we restructure your mortgage and we implement these strategies before you actually retire because it's going to be a lot easier to qualify. If you come to me saying I retired last month and all I'm getting is this Social Security or this pension or a combination, a lot of the time your finances will be out of whack and we can't get the loan approved because of your debt to income ratio. Had you called me even 3 or 6 months earlier while you were still working, we would be able to actually get you approved, restructure the finances, consolidate debt, do all the things we're talking about, extend the term of your loan without as much friction as if you wait until it's too late.
The only thing I concern myself when hearing that, although it makes sense, Rob, is that there are seniors right now listening to this saying, I'm learning about this too late. I'm already retired, or I've long since retired. I wish I had a plan, or maybe I need to come up with a plan now. No, you can't come up with a plan now. It's too late. He said, you have to be working.
You know, it's a matter of saying the best time would have been before yesterday or a year ago. The next best time is right now today. You need to get advice from a mortgage advisor that's going to be able to put you in your place as far as which of these strategies is going to work for you, which is going to accomplish your goals, and do you qualify? If the answer is no, then at least you swung the bat. At least you tried. If you don't make that contact, if you just assume, and so many people do, they just assume they're not going to get approved and it's not going to work, and that's incorrect. I've had many people that think it won't work, and we find out creative ways to make it work, but you need to take that step and make that contact and have an evaluation, have an analysis done of your circumstance before you throw in the towel.
That makes a lot of sense. Can you... I guess there's like anything in life, Rob. There's pros and cons to everything, right? You know, and I would imagine you spoke about a lot of the pros, you know, and the criteria, more specifically the criteria when it comes to reverse mortgages. But let's dig a little deeper now. Let's talk a little bit about the pros and cons of the reverse mortgage.
Yeah, let's start with the pros, which is like we've been talking about. There's no mortgage payment required. And I want to bold and underline the word required because many people think you can't make a payment on a reverse mortgage. That's incorrect. You can make a payment, and I would encourage you to make a payment on the reverse mortgage. It's just you don't have to. So if you're in a cash flow tight situation, you can just add that payment to the balance. It'll automatically be added to the balance of your mortgage. In a typical reverse mortgage where you're not making payments, the balance is going up every month, okay? Not down like a normal forward mortgage. What that's going to allow you to do if you don't make the payment is you're going to be able to better manage your expenses. You're going to be able to take care of the medical bills, the travel, the retirement lifestyle that you've wanted that you maybe couldn't have before when you have a mortgage payment. In New England, in Connecticut, you know, average mortgage payments with taxes and insurance can run upwards of $2,000 plus a month, depending on the area. So to be able to eliminate even a portion of that, because you still have to pay the taxes, you still have to pay the insurance. But if we eliminate the mortgage principal and interest from a required monthly budget, then it frees up, like I said, could be $1,000 to $2,000 a month in cash flow. So that's going to allow the senior to better manage their expenses. Another huge pro reverse mortgage, you know, if you look at it versus other retirement income strategies, is that it's non-taxable. A reverse mortgage is a loan. Based on the current tax code, loans are not taxable. So when you're getting $1,000, $1,500, $2,000 out of a reverse mortgage line of credit, it's non-taxable to you. Huge advantage there, as you know, with the tax brackets and all the different things that can be owed. The other great thing about a reverse mortgage versus other mortgages is that you're protected with that mortgage, even if the balance exceeded the value of the home. People get worried about, well, if my balance is going up every month, what if the home value goes down and now I owe more than the house is worth? Reverse mortgage has protections in there where you're never going to have to worry about that. The bank will eat the difference if they end up financing more than the house is worth, which is a huge protection. One of the biggest advantages of a reverse mortgage we haven't even touched on, I know we mentioned the line of credit, but a reverse mortgage line of credit grows every year. It's kind of like having your money in the market where it's going to go up gradually every year. So you may start out with, let's say, a $50,000 line of credit, but the next year you might have access to $53,000. And the year after that, you might have access to $56,000, $60,000, $70,000. As the years go on, you have access to more money, and it's contractually guaranteed in a reverse mortgage. That's unlike any other product.
But that has to get paid back monthly, right? Or
it doesn't. Or
is that just same thing?
In.
Oh my
It's
goodness.
the same thing. It can be paid back if you want, but it's not required. And that's why it allows seniors to tap equity in their home as needed without that obligation that they get so worried about.
Is it based on the same principle that whole life insurance is based on? You know how like you're not borrowing from the money that you've put in whole life. You're borrowing against it.
No, different concept here. You are actually borrowing money from a line of credit, and it is going against the equity in your home, which again is why, depending on your age, you need to have that very high equity position from the beginning. Yeah. And the bank is going to do analyses on your age and on what you owe in order to